Nick Ayton. And it's interesting, isn't it, when you think about angels going through their evaluation process on whether to invest or not. And I just wanted to remind you of a couple of the angels that I talk to regularly. And in actual fact, if I'm not sure myself, because it's a specific area of compute or technology that I haven't been touching for a while, very often these angels are very current. And I had a particularly good, what I thought was a good solution, a good founding team, a good proposition that really solved a current market need. And the angel spent an hour and a half on the first call and went through the normal. There was no pitching at this point, by the way. There was no going through the decks. And the angel wanted to meet the founder, get to know the founder, how he thinks, asking a lot of questions about, discipline and process and the journey to this point, and the genesis of the idea and how he came up with it, and the journey to get product, built and designed and tested and so on, and then talk about the customers and the pipeline and traction in the market, and a little bit about obviously income and expenditure, and that was it in about an hour and a half. And the first call with an angel, in fact most investors, is what I call the comfort call. And if you go straight into pitch mode and go through the deck, you don't get that level of comfort. I would much rather the founders talk about who they are, their genesis, their journey, their motivation, some of the softer issues, because for an angel it's very much a personal choice. It's people investing in people, so it's very important. Second call was set up with this team, and ahead of time the investor sent me a list of questions, which was really useful actually, because it reminded me to the extra lengths that an angel and an investor goes to, which they may not ordinarily share, but they did this time, which reminded me of some of the fundamentals. A lot of the questions stemmed around ownership, company registration, shareholding, any change of directors over time, the diligence of reporting, maybe a set of filed accounts, and that reveals quite a lot in terms of voting rights, people of control, and other activities. Has there been founders falling out? Has there been a parting of the waves? And so on and so forth. So that's important, founder, get your head around that so you can answer those questions. The next area that was quite revealing was really digging into the product and the service. The numbers, who built it, are those developers still on the team? What happens if things go wrong? Where's the software? Who's the ownership? Is there a patent? Is the software or the service, is it in escrow if something goes wrong? What are customers asking for? So there's a lot of digging into the genesis of the product and the cost base, and for me that's something also that founders forget, is that comfort to an experienced angel investor who's probably made their money in your industry, comfort comes at several levels. Are they comfortable with the team? Then are they comfortable with the story? Are they comfortable with the legal and commercial company structure? And are they comfortable with the cost base? And do they think that there's going to be smooth water ahead, to a point where if they put their money in, their money's not going to be lost on something that they missed. There's friction in the company, the founders fall out, there's some argument over intellectual property, key team members decide to leave, and. Talk soon.